Have you ever heard investors saying that ESG only generates costs? And about the term anti-ESG movement. Today you learn more about those critics about ESG that's not widely known. So, welcome to our channel. My name is Lenah Sakai. I'm Green Business Post editor, and you will learn about ESG markets backstage. We divide the content in three. First, we'll learn about the main complaint. Then we'll learn about what's happening with BlackRock. Our last topic is about one of the largest investment managers that does not accept ESG as in their thesis of investment. They talk openly about that choice. So what's the main complaint about ESG? The first, most of us know, it's imposition of practices, not letting organization managers to have freedom to decide about their own companies or governments about their own countries. And also, most of the practices are not directly connected to organizations' operation. They're disconnected, they're not directly connected. And because of that, it's difficult to put in practice, it's difficult to connect with results. The next complaint that is very important is about market manipulation. So how does it happen? When a regulator, a government, define what organizations in general, all of them should do. For example, they all should use the solar panel. All organizations should use solar panel, for example. So you are defining that the solar panel market is going to grow, and that is a kind of manipulation. You will know that it will grow, so you can invest first because you're deciding it. And it's not the market who is deciding, really. So that's why this second critique is very important. And regulators of the stock market, they are creating a practice that's against their own rule. And the third main complaint is about the ESG, is about the ESG in the political agenda. So the political agenda, in politics, they define what is in the law, what will be considered right, how much tax you pay, or it's a very delicate issue that impacts the whole country and other countries also. Politics can close companies. They can define if a product or service can or cannot be offered. Can or cannot be offered, even if they are already being offered, even if there is a lot of people employed. Companies can be closed from one day to another. That's why all of us should keep up with whatever the politics are discussing and doing, and we should participate. And speaking about political agenda, that is one of the main reasons BlackRock is getting far away from ESG in a way that we did not expect, because BlackRock was the main investment manager who made ESG well-known, strong, and demand ESG for the companies. But now it is backtracked on ESG. Let me show you more details about BlackRock. Larry Fink, CEO of BlackRock, he said that he no longer wants to mention the term ESG. And I went after results that was close to the time he said that, and I found that there was a drop of more than $1 trillion in managed assets of BlackRock. So I don't think that Larry Fink said that is a coincidence. I think there is I wrote about it, there is a whole movement, financial movement, pressure in results that made Larry Fink say some things that we're going to see. He says that he's tired. He is complaining about how the ESG connotation got negative because mostly because of political extreme left and right. So doesn't matter which side of political extreme, he says, is tiring him, is pressuring him, and he's getting. He said that it's excessive demands that is making him tired. And I'm going to say an example that he said about CO2 emission to contribute to reducing global warming. He's accused by the left that he's accused by the right of being aligned with the left, and he once accused of wanting to destroy the oil and gas industry. But in the other side, the left are complaining that BlackRock wasn't really contributing to climate change because it was divesting itself of the oil and gas industry, just because they have still investments in the oil industry. So both sides are complaining, and he's tired of it. Imagine they are they're the largest investment manager. They're a big target of the public opinion and of politicians and or companies. So it's a big pressure on them, and Larry Fink is not taking the pressure. But I brought some numbers about BlackRock investment numbers, and it explains a bit results, negative results that BlackRock is having. For example, here, some states, U.S. states like Texas and Florida, withdrew investments in BlackRock in criticism of ESG. Florida alone withdrew $2 billion. $1 billion, it's a lot of money. The state of Kentucky praised BlackRock competitor Vanguard for withdrawing from consortium focused on reducing carbon emission. They do not believe in this carbon emission, that it contributes to global warming. They have other numbers in science, and they do not believe, they think it's a waste of money. That's why they are withdrawing their money. And one of the main issues BlackRock is the global warming, is about carbon emission. So they got in BlackRock's main issue. And another very important number about the ESG critics that the left is calling them anti-ESG. This term anti-ESG is not exactly correct, because the critics of ESG can be anyone. I am a critic of ESG also, but I'm not anti-ESG. They are not anti-ESG. They're not against ESG. They are in favor of good practices, of social positive impacts, environmental, taking care of environment. So they're not against ESG. They're against those main practices that are being posed, and some issues that they found in the science, numbers that are totally against those arguments, and they want to use the money for the population and not for things that are not they think they see it's waste of money. So it's another point of view. But this anti-ESG is being used to describe them. So if you hear, you will know they're the critics of ESG, and they say that there was an increase of 400% of those of actions that are not going to ESG, investments that are not going to ESG. The shareholders, they are proposing investments that are not on ESG issues, and those And those resolutions increased 400%. That happened between January 1st and May 31st, between 2020 and 2013. So it's a very relevant number of requests from the shareholders, and that movement shows us a bit of the market movement. Not a bit, but a lot of the market movement. And we can see that shareholders are not happy with ESG investments, and that's why they are moving against it. This year, BlackRock announced their report of 2024, and they did not focus on ESG. They focused mainly on financial resilience. So we can see how much financial has affected BlackRock. So this Larry Fink statement about ESG word, of saying it or not, was a beginning of their trouble with ESG issue. In the next video, I'm going to detail a bit more about this report. And before we talk about the other investment manager that is against, that works, does not work with ESG, and they explain why. If you're liking the video, if you have any doubts or want me to talk more about something, comment here. And we have a cause. We want to reduce the negative impacts that many companies are doing. That shouldn't be that way, because it's opposite of the ESG proposal. And I wrote about those errors in a book, organized its knowledge in a book for you that want to study better and help us work better to cause more positive impacts in society and environment and on governance work. So know more about the book in the description. All the money will go to a non-profit independent organization initiative. We have Aware Alliance, and you can read more about in the description, also in the description. So let's go to the third. Let's know about the Vanguard. It's Vanguard, our example of today, because they say it why they don't want to invest in ESG. They don't hold this information. They are not ashamed of their choice. So let's understand why Vanguard rules out ESG. So firstly, the Vanguard CEO, he explains, Tim Buckley, Vanguard CEO Tim Buckley, he calls ESG practices as random practices, like we said, not directly related to the organization's main work. So he doesn't consider that a good way of investing, of seeing if the organization should receive money, because those works are not going to directly help on the organization's main work operation, so that the operation will bring good returns. And he see in the market, he see those ESG practices as generating superficial value that may increase for a while in the side of the market, but as it does not generate real value, then this value drops and it gets to the real value. So he says that it's superficial, it's not real value. And he wants to focus on fulfilling fiduciary duties for their clients. Their responsibility is to take the client's money and put into companies, into companies that are solid, that have a good operation, good market, that are earning money, are growing, and because of the growth, because of their good work, they are going to return on profits for those clients. That's their responsibility, and he wants to focus on it. So that's the difference between other investment managers, Vanguard wants to continue the investment as it was, with strong fundamentals, he says, rather than those that are solely focused on meeting certain ESG compliance standards. He sees this type of investment strategy as being more beneficial in the long term because it takes into account things like profitability and sustainability rather than simply trying to meet arbitrary guidelines set by organizations like the UN or other regulators bodies. So that's his opinion, and that's how he conducts Vanguard. And about the costs that I said in the beginning of the video, the investor says that ESG only generates costs. It's not cost, the word, correct word is expenses. Costs are, for example, in the bakery, when you buy a flour to make the bread, that's a cost. But when you pay for the air conditioning, that's an expense because the air conditioning is not going to become a bread that you're going to sell. It's not directly going to return in receipts. So that's why, like Vanguard CEO said, it generates expenses because it's practices that are not related to the operation. And that's why other investors says the same. So today you learned about some of the main movements on the backstage of ESG's market and information that are not very well known but there are some recent happenings that are showing bigger results from ESG practices that we cannot make the same mistakes. They're not positive, they're negative. And we should, not only in the financial market, but we should know what's happening in the real world, the real negative results that are happening, especially in the European region. So our next video, we're going to talk about ESG practical results. Some results that are very dangerous for entire populations, and we should understand, learn from them, not to make the same mistakes. So let's see the next video I will put around here. You can, if you liked our video, don't forget to subscribe. But I'll ask you to follow us on our newsletter because the social media not always deliver the notification to everyone, but by email you will receive for sure. So it's in the description. Subscribe in our newsletter. I'm going to launch tools, courses, and the next videos, vouchers especially for the community, for you, the sustainable community. Don't forget to leave your comment if you want me to talk about specific issues or if you have doubts. So see you in the next video. Green Business Post, Responsible Impacts for Sustainable Communities.